Right now, there is a bold claim spreading across the crypto space that XRP is guaranteed to hit exactly $88.62 by July 31st. And this prediction is coming from an analyst who believes the market is about to enter a powerful breakout phase. But before you get excited or make any quick decisions, you need to understand what is really behind this number, what factors could support such a move, and most importantly, whether this kind of price target is realistic or simply another wave of hype that often appears during volatile market cycles. Because in crypto, strong claims can create strong emotions, and strong emotions can lead to costly mistakes if you are not fully informed. The statement that XRP will reach $88.62 by July 31st sounds extremely precise, and that precision itself is what makes it so attractive and at the same time questionable, because financial markets rarely move in such exact ways without strong and verifiable reasons behind them. So, the first thing to understand is where this kind of prediction usually comes from and why analysts sometimes present numbers with such confidence. In most cases, these price targets are based on a mix of technical analysis, historical patterns, and expectations around future events that could impact the price of XRP. And one of the most common tools used by analysts is chart analysis, where they study previous price movements and try to identify repeating patterns such as breakouts, consolidations, and trend reversals. And when they find a pattern that looks similar to something that happened in the past, they project a potential future price based on that pattern, which is likely how a specific number like $88.62 was calculated. Another important factor behind such predictions is the belief that XRP is still undervalued compared to its potential use in global finance, especially in cross border payments, where it aims to provide faster and cheaper transactions compared to traditional systems. And this idea has been a major driver of bullish sentiment around XRP for many years, with supporters arguing that if adoption increases significantly, the price could rise to levels that seem unrealistic today. And this long term belief often gets combined with short term technical signals to create bold predictions like the one currently circulating. However, there is a critical difference between long term potential and short term guarantees. And this is where many investors get confused, because even if XRP has strong fundamentals, it does not mean that it can reach a very high price within a fixed and short time frame, especially something as specific as reaching nearly $90 within weeks or months. Because for that to happen, the market would require an enormous amount of capital inflow, far beyond what is typically seen in such a short period. To put this into perspective, the total market value of XRP would need to increase dramatically to support such a price. And that would not only depend on retail investors, but also on large institutions, regulatory clarity, and overall market conditions, including the performance of major cryptocurrencies like Bitcoin, which often influences the direction of the entire market. So a single prediction cannot ignore all these interconnected factors. Another point to consider is how analysts use language like guaranteed, which is a very strong and risky word in the world of investing, because nothing in financial markets is ever guaranteed. And any claim that suggests certainty should always be approached with caution, as experienced traders and investors understand that markets are influenced by countless unpredictable variables, including economic changes, regulatory decisions, and sudden shifts in investor sentiment. It is also important to recognize that bold predictions tend to spread quickly on social media because they attract attention and engagement. And this can create a cycle where more people start believing in the possibility of such a price target without fully analyzing the underlying logic, which can lead to unrealistic expectations and poor decision making, especially for those who are new to the crypto space and may not yet understand how volatile and unpredictable these markets can be. At the same time, it would be unfair to completely dismiss every bullish prediction because the crypto market has shown in the past that unexpected rallies can happen and assets can sometimes move much faster than traditional financial models would suggest. But the key difference is that these movements are usually driven by a combination of strong catalysts, such as major partnerships, technological breakthroughs, or significant regulatory developments, rather than a single analyst projection. So when you hear a claim that XRP will reach a very specific price by a very specific date, the best approach is not to accept or reject it immediately, but to break it down into its components, understand the reasoning behind it, and evaluate whether the conditions required for such a move are actually present in the current market. Because informed decisions are always better than emotional reactions, especially in a space where information moves fast and narratives can change overnight. We will go deeper into what kind of market conditions and catalysts would actually be needed for XRP to even come close to such a price level, and whether any of those factors are currently developing or still far from reality. To understand whether XRP can even move toward a price like $88.62 within a short period of time, it is important to look closely at the kind of market conditions that would be required to support such a massive increase, because price in any financial asset does not move in isolation. It is always the result of demand, liquidity, and overall confidence in the market. And when we are talking about a move of this scale, the requirements become extremely high. The first and most critical factor is capital inflow, which simply means how much money is entering the XRP market. And for XRP to rise to such a high price level, it would require billions upon billions of dollars flowing into it within a very short time frame, not just from small investors, but also from large institutions, hedge funds, and possibly even banks, because retail demand alone is usually not enough to push an asset to such extreme valuations in a limited period, especially when the circulating supply of XRP is relatively large compared to many other cryptocurrencies. This brings us to the concept of market capitalization, which is often misunderstood by new investors, because when people hear that a coin can go from a few dollars to dozens of dollars, they sometimes forget that the total value of all coins combined must increase proportionally. And in the case of XRP, reaching a price near $90 would mean a massive expansion in its overall market value, potentially placing it among the largest financial assets in the world. And this kind of growth typically does not happen overnight without a major shift in global financial systems. Another key factor is regulatory clarity, which has been one of the biggest challenges for XRP over the years, especially due to legal battles and uncertainty in major markets like the United States, because institutional investors usually require a clear and stable regulatory environment before committing large amounts of capital. And if there were a sudden and very positive regulatory outcome that removes all uncertainty around XRP, it could act as a strong catalyst for price growth. But even then, the impact would likely unfold over time rather than instantly pushing the price to such a high level. In addition to regulation, real world adoption plays a huge role in determining the long term value of XRP, particularly in the area of cross border payments, where the technology behind XRP aims to improve speed and reduce costs compared to traditional systems. And if there were a sudden surge in adoption by major financial institutions, payment providers, or even governments, it could significantly increase demand for XRP. But large scale adoption is usually a gradual process that involves testing, integration, and trust building, which again makes a rapid price jump to a specific high target within weeks less likely. Another important element to consider is the overall condition of the crypto market, because XRP does not move independently from the rest of the market. And in most cases, Major price movements are strongly influenced by the performance of leading assets like Bitcoin and Ethereum. And for XRP to achieve such an aggressive target, the entire crypto market would likely need to be in a strong bullish phase with high investor confidence, increasing trading volumes, and positive sentiment across the board. Because in a weak or uncertain market, even strong individual assets struggle to maintain upward momentum. Liquidity is also a crucial factor that is often overlooked because as the price of an asset rises, there must be enough buyers at each level to sustain that movement. And when prices increase too quickly without sufficient liquidity, it can lead to sharp corrections as early investors start taking profits and new buyers hesitate to enter at higher prices. So, for XRP to climb steadily toward a very high target, it would require consistent and growing demand at every stage of the rally, which is difficult to achieve in a short time frame. It is also worth examining the psychological aspect of the market because investor behavior can have a powerful impact on price movements, especially in crypto, where emotions often drive decisions more than fundamentals. And when a bold prediction like this spreads, it can create excitement and fear of missing out, leading to increased buying activity in the short term. But this kind of momentum is often unstable and can reverse quickly if expectations are not met, resulting in sudden drops that catch many investors off guard. At the same time, large holders, often referred to as whales, play a significant role in price dynamics because they have the ability to influence the market through large buy or sell orders. And if XRP were to experience a rapid increase in price, it is likely that some of these large holders would begin to take profits, which could slow down or even reverse the upward movement, adding another layer of complexity to any prediction that assumes a smooth and guaranteed rise to a specific price. So, when you combine all these factors, including capital inflow, market capitalization, regulatory clarity, adoption, overall market conditions, liquidity, and investor psychology, it becomes clear that reaching a price like $88.62 within a fixed short time frame would require a near perfect alignment of multiple powerful catalysts happening at the same time. And while not completely impossible in a theoretical sense, it is certainly not something that can be guaranteed by any analyst, no matter how confident they may sound. We will examine the analyst's perspective more closely and break down the possible reasoning or models that could lead to such a specific price target and whether those assumptions hold up when tested against real market behavior. Now, it is important to closely examine how an analyst could arrive at such a specific price target like $88.62 because numbers like these are rarely random. They are usually derived from certain models, assumptions, or interpretations of data, and understanding this process will help you separate structured analysis from pure speculation. One of the most common methods analysts use is based on technical patterns, especially something known as breakout projections, where they identify a previous price range and then measure the potential move after a breakout occurs. And in many cases, they apply mathematical tools like Fibonacci extensions, which are used to estimate how far a price could travel once it breaks above a key resistance level. And this can sometimes result in very precise targets, including numbers with decimals, which gives the impression of accuracy, even though the underlying process is still based on probabilities rather than certainty. Another approach that might be used is historical comparison, where analysts look at previous bull runs in the crypto market and try to find similarities with the current situation. For example, they may observe how XRP performed during earlier cycles and then assume that a similar percentage increase could happen again. And when they apply that percentage growth to the current price, it can produce a much higher target. But the problem with this method is that past performance does not guarantee future results, especially in a market that is constantly evolving with new participants, new regulations, and changing global conditions. Some analysts also rely on what is known as valuation models, which attempt to estimate the fair value of an asset based on its potential use cases, adoption rate, and role in the financial system. And in the case of XRP, this often involves the idea that it could become a bridge asset for international payments, replacing or supporting traditional systems. And if that scenario were to fully develop, the demand for XRP could increase significantly, leading to higher prices. But these models are highly dependent on long term assumptions and do not usually justify a specific short term deadline like July 31st. There is also a possibility that such a precise number is influenced by psychological or marketing factors rather than purely analytical ones. Because in the world of online content and social media, specific and bold predictions tend to attract more attention than general statements, and a claim that XRP could reach around $80 may not spread as quickly as a claim that it will reach exactly $88.62 by a specific date. So sometimes these numbers are presented in a way that maximizes engagement rather than accuracy. Another important concept to understand is confirmation bias, which can affect both analysts and investors because once someone develops a strong belief that XRP is going to rise significantly, they may start focusing only on information that supports that belief while ignoring data that contradicts it. And this can lead to overly optimistic projections that do not fully reflect the risks involved. And when such projections are shared publicly, they can influence others who may not have the experience to critically evaluate them. It is also useful to consider whether the analyst has provided clear reasoning and transparent data to support their claim, because a credible analysis should include not just a price target, but also a detailed explanation of the assumptions behind it, such as expected adoption rates, market conditions, and potential catalysts. And if these details are missing or vague, it becomes much harder to trust the prediction, especially when it includes strong language like guaranteed, which suggests a level of certainty that does not exist in real financial markets. Another factor that could be influencing such predictions is the expectation of a major upcoming event, such as a regulatory decision, a partnership announcement, or a technological upgrade, because analysts sometimes anticipate that a single event could trigger a rapid increase in price. And while it is true that certain events can have a significant impact, the market reaction is often unpredictable and may not align with expectations, as investors may have already priced in the news or may respond differently than anticipated. It is also important to remember that even if the underlying logic behind a prediction has some validity, the timing is often the most difficult part to get right because markets do not move according to fixed schedules, and even strong bullish trends can experience delays, corrections, or periods of consolidation before continuing upward. So, attaching a strict deadline like July 31st adds another layer of uncertainty that makes the prediction even less reliable. When you put all of this together, it becomes clear that a price target like $88.62 is likely the result of a combination of technical projections, historical assumptions, and possibly some degree of speculation or presentation style aimed at attracting attention. And while it may reflect a bullish outlook on XRP, it should not be interpreted as a guaranteed outcome or a precise forecast that will unfold exactly as stated. We will take a more realistic view by comparing this prediction with current market data and exploring what price levels are actually achievable in the near term based on existing trends and conditions, so you can develop a more balanced and informed perspective. Now it is time to step away from bold predictions and look at the current reality of the market, because understanding where XRP stands today can give a much clearer picture of what is actually achievable in the near term. And this is where many exaggerated claims begin to lose strength when compared with real data, trends, and market behavior. At present, XRP's price movement is influenced by a combination of technical structure, investor sentiment, and broader crypto market direction. And when analysts study the chart in a realistic way, they usually focus on key levels such as support and resistance, which represent areas where price has historically struggled to move below or above. And these levels are critical because they act as checkpoints that the market must break through before any major rally can continue. If XRP is currently trading far below a level like $88, which it is, then the path toward that target is not a straight line. It would require multiple stages of growth, each with its own challenges and potential pullbacks. And in most cases, markets move in waves rather than in a single continuous surge, meaning that even during strong bullish periods, prices tend to rise, correct, consolidate, and then rise again, which takes time and sustained demand. A more realistic approach used by experienced traders is to identify incremental price targets based on existing momentum. For example, they might look at previous highs and consider whether XRP can break above those levels first, because reclaiming past highs is often a strong signal of continued bullish strength. And only after those levels are cleared does the market begin to explore new price territory. So expecting XRP to jump directly to a very high number without first passing through these stages does not align with how markets typically behave. Another important factor is trading volume, which reflects how much buying and selling activity is taking place. And for any significant price movement to be sustainable, it needs to be supported by strong and consistent volume, because low volume rallies are often weak and can reverse quickly. And when you analyze XRP's current volume trends, it becomes clear that a gradual increase in participation would be necessary to support higher price levels over time. In addition to technical factors, macro conditions also play a major role, including interest rates, global economic stability, and investor appetite for risk, because cryptocurrencies are often seen as risk assets, meaning they tend to perform better when investors are confident and willing to take on more risk. And if the broader financial environment is uncertain or restrictive, it can limit the upside potential of even fundamentally strong assets like XRP. There is also the matter of competition within the crypto space, as XRP is not the only project aiming to improve payment systems or provide fast transactions. And while it has its own strengths, the presence of other technologies and networks means that investor attention and capital are spread across multiple assets, which can influence how quickly any single asset can grow in value. Another realistic consideration is profit taking behavior, because as prices rise, early investors often begin to sell portions of their holdings to secure gains. And this creates selling pressure that can slow down or temporarily reverse upward momentum. And this is a natural part of any market cycle, but it becomes especially important when prices increase rapidly, as it prevents the kind of uninterrupted surge that would be required to reach an extreme target in a short period. It is also useful to think in terms of probability rather than possibility, because while it is technically possible for XRP to reach very high prices under ideal conditions, the probability of it happening within a specific and short time frame is much lower, and experienced investors focus on scenarios that have a reasonable likelihood based on current data, rather than extreme outcomes that depend on multiple unlikely events occurring simultaneously. At the same time, this does not mean that XRP lacks potential, because there are still positive developments that could support gradual growth, such as increased adoption, improved regulatory clarity, and continued interest from both retail and institutional investors. And if these factors align over time, XRP could certainly move to higher levels than it is currently at. But this would likely happen in stages rather than in a sudden leap to a very specific price point. So when you compare the bold claim of reaching $88.62 by July 31st with the current market structure, it becomes clear that there is a significant gap between expectation and reality. And closing that gap would require not just optimism, but a series of strong, measurable developments that are visible in the data. And until those developments begin to appear, it is more practical to approach such predictions with caution and focus on what the market is actually showing in real time. In the final part, we will bring everything together and give a balanced conclusion on this prediction, along with a clear financial disclaimer and a reminder of how to approach these kinds of claims responsibly in the crypto space. After breaking down every angle of this bold prediction, it becomes clear that the statement claiming XRP will reach exactly $88.62 by July 31st is built more on optimism and assumption than on realistic market conditions. Because while there are elements within the XRP ecosystem that support long term growth, the idea of a guaranteed price target within such a short and fixed time frame does not align with how financial markets actually behave in reality. When you step back and look at the full picture, you can see that multiple factors would need to align perfectly at the same time for XRP to even come close to such a level, including massive capital inflow, strong institutional participation, clear and positive regulatory outcomes, rapid global adoption, and a highly bullish overall crypto market. And even if some of these factors begin to develop, they usually take time to build momentum and reflect in the price rather than causing an immediate and extreme surge to a very specific number. Another important takeaway is the use of the word guaranteed, which should always raise a red flag for any investor, because in trading and investing, there is no such thing as a guaranteed outcome, and any claim that suggests certainty is often ignoring the inherent risks and unpredictability of the market. And this is especially true in the crypto space, where prices can be highly volatile and influenced by sudden changes in sentiment, news, or external economic conditions. At the same time, it is important to maintain a balanced perspective, because completely dismissing XRP's potential would also be a mistake, as the asset continues to have a strong community, ongoing development, and a use case that many believe could play a role in the future of global payments. And if progress continues in these areas, it could support steady growth over time. But that growth is more likely to happen in phases rather than through a single explosive move to an extreme price level within weeks. This is why experienced investors focus less on exact price predictions and more on understanding trends, managing risk, and making decisions based on evidence rather than emotion, because chasing bold claims without proper analysis can lead to poor entry points and unnecessary losses, especially when expectations are not met and the market reacts in the opposite direction. It is also worth remembering that the crypto market often goes through cycles of hype and correction, where strong narratives drive prices up quickly, followed by periods of consolidation or decline when reality sets in. And being aware of this cycle can help you avoid getting caught in the excitement of unrealistic targets and instead stay focused on long term strategy and disciplined decision making. So instead of asking whether XRP will definitely reach $88.62 by a specific date, a more practical question to ask is whether the current market conditions support continued growth, whether key resistance levels are being broken, and whether there are real developments happening that could justify higher valuations over time, because these are the factors that provide meaningful insight rather than a single number attached to a deadline. In conclusion, while the prediction may capture attention and create excitement, it should be viewed as a speculative opinion rather than a reliable forecast. And the smartest approach is to stay informed, remain cautious, and base your decisions on a combination of data, analysis, and realistic expectations, because in the world of crypto, patience and discipline are often more valuable than chasing the next big claim. This content is for informational purposes only and should not be considered financial advice. because investing in cryptocurrencies involves a high level of risk and prices can move up or down at any time without warning. So it is always important to do your own research, consider your financial situation, and if needed, consult with a qualified financial advisor before making any investment decisions. And if you want to stay updated with clear and realistic breakdowns like this, make sure to follow for more content and stay informed without falling into hype driven narratives.